Hello, my friend Arnold here. Just want to run through a video here to talk about the zone trader. So if you're brand spanking new to TNT Solutions and you've never used the zone trader and you're not really sure what it is or what it does or how it works or how to set it up, that's what this video is all about. So the first thing I want to do is talk about the strategy a little bit and how the settings will help you, set this software up so that it'll run really, really, really well for you. Okay. So first of all, again, this is just for demo purposes. And I'm just showing you this stuff on a demo account. And so we're going to kind of talk about everything here. But the zone trader uses the zone strategy. That's actually why we called it the zone trader. Kind of only makes sense, right? And the way that the zone strategy works, in simple terms or in quick synopsis, it's what we call a breakout strategy with, or a bi-directional breakout strategy is a more accurate term. So it's a bi-directional breakout strategy with a martingale hedging function built into it. Okay, and what all that really means is that we don't care what direction the market goes in. We're not trying to do a bunch of market analysis. We're not using Fibonacci's. We're not using, support levels and resistance levels and everything else. So we're not trying to predict what direction the market goes. We're just saying, all right, the market, you do what you want to do. We'll go along for the ride and we'll profit as you go. All right. So what you'll see here is I have these three lines. This represents a zone. So first of all, we typically run this on the 5-minute chart. And that doesn't mean that it's only a scalping system. All the chart or the time frame option does for us is it tells us when to paint a new zone. Okay, so what happens is when you load the zone trader, when you load the software on your chart, you tell it how big of a zone, and I'll show you here in a second. So I'm going to double click on the zone trader here in the expert advisor. So again, I'm assuming you've already loaded the software. You've gone through the process of loading the software onto your MT4 on your VPS. So I'm not going to go through that because I'm assuming you've already done that at this point. So now you have the most up-to-date version of the zone trader in your expert advisors file. So you just double click on it. All right. And what I always want to like to make sure of is that I have these boxes checked. This one here, and then all three of these over here. It's under the common tab. Okay. So that's what I always like to do. So I would recommend you do the same. You don't have to just click that one. Just click these two here and then these three over here. Then you go to your inputs field. All right. So the first thing I need to talk about is what we highly, highly, highly recommend. Okay. We highly recommend that you run this on a trading account that has a leverage of at least 1 to 500. Okay. 1 to 500 leverage. And you want to start with a balance of $1,000 in your account or more. But you really want to have $1,000 in your account and you want to have 1 to 500 leverage. Now, can you run this with an account that has less than 1 to 500 leverage? Yes, you can, but you need more money in your account to make up for the difference in leverage. So for instance, if you only have a trading account with 1 to 200 leverage, well, 200 goes into 500 2.5 times, right? So that would mean that you would want 2,500 in your account to make up for that difference in leverage. But you would still want to run the settings on your account as if it was $1,000. Okay? So that only makes sense, right? So the leverage is big with this because it deals with your margin levels. You want to make sure you have plenty of margin available in your account to run the software appropriately and accurately and successfully. So that's why we recommend 1 to 500 leverage and at least $1,000. So everything I'm going to talk about in here is going to be based on 1 to 500 leverage and $1,000 minimum in your account. Okay. So, but the first thing you'll see here in the actual settings is zone size. So this here, we have it defaulted to 20 pips. Okay. That's what the 20 is there. It's the number of pips within the zone. So let me show you what that means. So when you have it set to the 5-minute candle, the 5-minute time chart, that means every one of these candles represents 5 minutes. So when you have it set to 5 minutes, that's telling the system that when the next 5-minute candle forms, that is when it will paint the new zone. Okay. So right now I'm recording this at a time where the markets are closed. I'm recording this over the weekend. The markets are closed right now, so none of these candles are moving or doing anything. So that's why I manually put a zone on here. So this is assuming, I'm kind of coming back here because I want to use this as an example. So let's assume back in here is where this candle right here, this one, this small little candle right here just starts to form. This one closed and this one starts to form. So it painted a new zone. And this center line here, when it paints a new zone, the center line, now the lines aren't going to be all red. The center line will be white. The top line, I think, is blue, and the bottom line will be red when it physically paints a zone, when the software actually does it. But I just used, you know, these lines just to kind of do some training here. So this is the center line, and it represents the current market price when the zone paints. So we don't care what direction the market goes in from here. We're just ready, and this is a 20 pip zone. Like I said in the settings, it's set to 20 pips. So what that means is from the center line down to the sell line, this bottom line is a sell line, is roughly 20 pips. When the software does, it'll be exactly 20 pips. But that's, I painted it roughly 20 pips, and then if you come up to the buy line, that's roughly 20 pips as well. Okay, so from the center line to the buy line is roughly 20 pips based on the settings that we have, and then down to the sell line is roughly 20 pips. Okay, so we don't care what direction this market goes in from here. In this scenario, you can see here it went up. Okay, this scenario went up, up, up. It hit our buy line. So what it did at that point is it would have taken a buy position. Now, how does it determine what lot size to use? Well, let's go back here to the settings. That's where we tell it to. So, and again, here you can see the next setting. So that's the 20 pip zone. So we have those zones from top to bottom, or from center to bottom, and from center to top is 20 pips. Now you can change that to, you know, 30 pips if you want to. You can change it to 50 pips, whatever you want. We kind of recommend 20 has worked really well, especially with the pair that we recommend, which is the Euro USD. We recommend that you only run this on the Euro USD, especially when you're just getting started. And if you have a smaller account, you only want to run it on one pair. And we highly recommend that that one pair be the Euro USD. All right, because it works very, very well on that. Now, this is where you tell it create new zone on next bar. So that's what I was talking about. These are 5-minute candles. When the new bar or when the new candle starts to form, that's when it will create that zone. All right, now here is your settings. So what we've done is we put preset settings in here. This is what most people are using because it auto compounds your account for you. So you can see here, we have basically 5 different options for you. And this is, again, assuming you have a 1 to 500 leveraged account. If you want to use ultra conservative settings, you can use a 0.01 lot per 1500. Very conservative, 0.01 per 1250. Conservative or standard settings, this is what we recommend. You can see here what it says recommended, 0.01 per 1000 in your account is conservative / standard settings. Okay, moderate would be 0.01 per 750, and aggressive would be 0.01 per 500. And again, I can't reiterate this enough or emphasize this enough. That is assuming that you are running a 1 to 500 leveraged account. Okay. So again, can you run this with less than $1,000? Yes, you can. But if you have 750 in your account, it's automatically considered moderately aggressive. If you have only 500 in your account, it's instantly considered aggressive settings. So just know that going in, that if you have less than $1,000, and let's say you just start with 500, the lowest lot size you can use on any trade is a 0.01 lot. So if a 0.01 lot with a $500 account is considered aggressive, that means the lowest level of aggressiveness that you can attach to your account is aggressive. So you're starting out aggressive right out of the gates, okay? So we highly recommend you start with a 0.01 lot per 1,000, assuming you have 1 to 500 leverage account. Again, if you only have 1 to 200 leverage, you want this to be a 0.01 per 2,500, and you wouldn't be able to use these preset. You'd have to do manual, okay? Hit none for manual, and then you would choose your lot sizes and your target profits down here, okay? You would choose your lot size here. Again, even if you have a $2,500 account with a 1 to 200 leverage, you start with a 0.01, and you would choose your take profit point from there, okay? But let's assume, again, going back to assumptions, you have a 1 to 500 leverage account and you have at least $1,000 in there. We highly recommend starting with a 0.01 lot per 1,000, which is our recommended settings. So choose that, okay? Then if you choose that, you can skip over this. And then you can come down here to profit amount per 0.01 lot. So what we recommend, especially if you're just starting out, we recommend $1 per 0.01 lot. And once you get used to everything and you get used to how it works, if you want to bump that up a little bit, I wouldn't go any higher than $1.50 per 0.01 lot. But you can start to play around with that as you get more used to the way the software works and the way it trades your account and so on and so forth. Okay. So what it will do then is, again, this is profit amount per 0.01 lot. So if you set it to $1 and you have it set to 0.01 per 1,000, well, if you only have $1,000 account, then it is, and you're going to have a 0.01 lot, then it's going to, every time it hits $1 in profit, it'll close out a trade sequence on the next candle, start a new zone, and do the process all over again. Okay. If you start with a $5,000 account and you have a 0.01 per 1,000, then you're going to start with a 0.05 lot, right? Which means that you're going to start with a $5 take profit. If you're using $1 per 0.01, and you start, if you have 5,000 in your account, it's going to actually start with a 0.05 lot. That means you're going to start with a $5. You're not going to enter $5 in here. You're going to still keep it at $1, but the system will automatically adjust that for you. Okay, the system will automatically adjust that for you. So again, this is a profit amount per 0.01 lot. So for every 0.01 lot, I want $1 profit, and the system will automatically make adjustments accordingly based on the size of your account. So if you use these auto presets, then you can ignore these down here. If you want to do manual, then you would enter in, your manual amount here, however you want to take profit. Okay. There's also a max loss section here. So you can enter either percentage or a dollar amount if you want to have kind of a stop loss feature built in. If you want to, you can. You have that option. Okay. Do you want this to trade on Fridays? We recommend no. And the main reason why is because we want to give the system the ability to close out any open trade sequences that it might still have open on a Friday before the weekend. Because ultimately, ideally, we do not want any trades held over the weekend. We really want to go into the weekend with all trades closed out if we can. And the best way to do that is to make sure that it doesn't open any new zones or any new trade sequences on Friday. So anything that's still open after 5 Eastern, 5 p.m. Eastern on Thursday, that's when the new trading day starts, okay? So then from basically 5:01 p.m. on Thursday, that's considered Friday, all right? Because that goes till 5 p.m. Eastern on Friday. So 5:01 p.m. Eastern on Thursday is considered Friday, okay? So you don't want it to open any new zone trade sequences anytime after 5 p.m. Eastern on Thursday, so that everything will close out and you go into the weekend with a clean slate. So the reason why we have this set to no on Friday is so that if we have any new trades or existing trades that roll over into Friday, i.e. anytime after 5 p.m. on Thursday, if there's still a trade sequence open, we want to give it the next 24 hours to make sure that it has a chance to close out that trade sequence so that your account is all closed out, up to date, no open trades going into the weekend, and it doesn't open any new trade sequences on Friday. So we want to make sure that we give it plenty of time to close out those existing open trades, and then you go into the weekend with a clean slate, and you start off with a fresh chart and ready to roll on Sunday nights when the market's open again. Okay, max spread. This is where you tell it where you want the spread, because most, as you know, there's a difference between the bid and the ask price here, right? So if you look over here in my navigator window on my market watch, you'll see these different prices, the bid and the ask. That's the spread for every pair, no matter what your broker is. Every broker's got different spreads. The spreads change from literally from second to second. The spreads are changing. So how you want your spread. So what will happen here is the system will not take any trades if the spread is higher than the number that's, now again, 20 points is actually 2 pips. All right, so if you set this to say like 25, that'd be 2.5 pips. All right, so it's based on points. which are pips. So for every 10 points is 1 pip, basically. All right, so if you set this to 20, that'd be a 2 pip spread. And if you're using the Euro USD, like we recommend, more often than not, the spread is below 2 pips. So, you know, when it wants to take a trade, it will. If the spread ever widens and goes beyond 2 pips in this scenario, it won't take a trade until it drops within that, you know, below 2 pips or 2 pips or below, okay? So now the martingale factor, what is this? Right now we have it set to 2. You have different options in here. You can have it set to 1.25, 1.5, 1.75, 2, 2.25. Now, honestly, I wouldn't recommend using anything above 2. All right, you can if you want to. If you have a large account and you're using a conservative lot sizes and you want to play around with that, always, always, always test with demo. Always, always, always test with demo. But if you want to play around with these higher martingale factors, you can. I recommend 2 or less, a martingale factor of 2 or less. And what that means is, so let me just go back here to the chart and talk through everything that we've done and talk through how that affects the trade so far, okay? So again, if you remember, I said before, we don't care what direction this price goes in. In this scenario, the new zone painted back here, the price went up, it crossed our buy line. So what it did was it took a buy position, and let's assume we have a $1,000 account and we set it to a 0.01 lot per thousand. So it's going to take a 0.01 buy, 0.01 lot size on a buy position right here. So at that point, ultimately what we wanted to do is we wanted to go up and hit our $1 take profit, which ultimately with a 0.01 lot, that's about 10 pips. $1 is about 10 pips. So really we wanted to move up 10 pips. All right. So the question here is, did it go up 10 pips before it pulled back? So let's go here and take a look. No, it went up about a little over 3 pips. So it didn't hit our take profit target yet. Okay. But what also happened is when it came up here and it took this buy position, it wants to keep this 20 pip zone consistent for the entire rest of the trade sequence. So now what it did is it automatically took this sell line down here and it moved it up to where the center line was, okay? So it moved it up here. So now, if you see, look, now it just created it's a 20 pip zone again, all right? So the entire zone is 20 pips. So now there's only 2 lines and there's a 20 pip zone between the 2, okay? So again, with $1 take profit point with a 0.01 lot, that's roughly 10 pips. So what happens is you see here it went up, it did not go far enough to hit our take profit, and then it pulled back. And then it pulled all the way back through the zone and it hit our sell line, okay? So what do you think that means? That means it took a sell position. But what it's going to do to offset the loss of the buy position, so this buy position is losing as it's coming down. It's losing, 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 losing. It hits the sell line. Then what it does is it takes a second position as a sell, but it's going to use the martingale factor, this right here. It's going to use this to determine the lot size of that sell. So again, we started with a 0.01 lot. Okay, we started with a 0.01 lot. Well, when it takes the sell position, it's going to double that because we have the martingale factor set at 2. So when it comes over here and it takes this sell position is going to be a 0.02 lot. So the martingale factor is double the size of the original trade, and it's going to offset the difference. So as this thing keeps coming down, the 0.02 is making up the difference for the 0.01 losing position. Okay, so even though the 0.01 is 20 pips in drawdown right now because it pulled all the way down through the zone, the 0.01 is 20 pips in drawdown. So it's roughly $2, I guess, right? So it's $2 in drawdown. It takes a buy position at a 0.02 lot, right? So now for every 10 pips, that's $2, right? So this thing's moving down, moving down, moving down, moving down. Now it's gone 10 pips, which is about $2. But the buy position at this position scenario is roughly $3 in drawdown. So there's still a $1 difference. But as it keeps pulling down, the 0.02 martingale is offsetting the 0.01 losing position, and it comes down far enough, And in this scenario, it came down about another 23 pips, which would have been enough to cover the profit on the 0.02 and offset the loss on the 0.01. So you would have hit your profit target of $1, and it would have closed out the trade sequence right here. And then really what it would have done is it would, let's say it closed it out on this candle here, right down here on the wick. Let's just assume it went all the way down in here to the wick. So when the next candle formed, this candle formed right here, right? That's the next candle starting to form. What it would do is it would start to paint a new zone. So then that would be the center line. And then on the new zone, let me pull this back a little more. The new zone would probably be somewhere right in here, right? So let's see if that's 20 pips. Close, not quite, but that's about 19. So I can change it a little bit. I'll pull this up a touch and then pull this down a touch. So that's rough. So then a new zone would paint. So you just closed out this trade sequence for profit. On the next candle, it paints a new zone and it starts the process all over again. So you can see here, if it did that, the market started to, from there, it started to go up. It would have taken another buy position, okay? It would have moved my sell line up to the center line in that scenario. I'll keep that 20 pip zone. And then from there, pretty much it's just kind of gone flat. Now, again, this was on a Friday. So again, you can also see this is like the end of day is probably the last 2 or 3 hours on a Friday, and it just starts to go flat. That's another reason why we don't trade on Fridays. So that would have been a perfect example, right? So, you know, this trade might have gone into Friday, and because we were able to run it through Friday, it closed out, and it would not have taken a new zone if we were, you know, if it truly was a Friday and we told it not to trade Fridays, it would not have painted a new zone because we're already into Friday. But I just wanted to show this as an example, all right? So in this scenario, if it came up here, took another buy, it hasn't gone far enough up to, I don't think this is 10 pips. Actually, it is. Look at that. That is more than 10 pips. So actually, it might have closed that out. You might have actually gotten another profit on that one. Depending on spread and commissions and all that kind of stuff, you might have actually closed another one out there before it started to pull back a little bit. But either way, you get the idea. So that's pretty much how it works. And then it just keeps doing that over and over and over and over again. And then, so that's your martingale factor. All right. And then you can choose here the number of orders. All right. We have a max of 9. You could choose 3, 4, 5, 6, 7, all the way up to 10. Actually, I'm sorry, you have a max of 10. It's up to you. Play around with that. And again, all that means is as this, oops, that's not what I wanted to do. As the market, if it continues to kind of bounce around in this zone a little bit, so let's say it comes up, it takes a buy, doesn't hit your take profit point, comes back down, hits a sell, doesn't hit your take profit point, goes back up, it takes a buy. So again, that'd be a martingale position, another martingale buy. So the first one was a 0.01. The second was 0.02. So if it come up here and took a third position at a buy, that'd be a 0.04 because it's double the previous position to offset that loss. All right, so in this scenario, you'd have 3 positions, a 0.01 buy, a 0.04 buy, and a 0.02 sell. And then we want it to go up here. If it doesn't, if it pulls back through the zone again, it takes a sell position, it would double the previous position if you're using a martingale factor of 2. So it could bounce around in here a couple of times before it decides to break out and take your profit. And that's really what that max position means, is how many positions are you willing to let it martingale, all right, at a point, whatever your martingale factor is. And again, if you want to be more conservative, you can set it to a lower number. You can set it to like a 1.5 martingale position. And then it will only multiply the previous position by 1.5 rather than by 0.2. So it's totally up to you. Test it. That's why we tell everyone test things on demo to see how the settings work, to get used to how the settings work, and to get used to using the software that whatever fits your style and your risk tolerance levels, I guess. All right. But then you basically tell it how many positions are you willing to let it martingale, to double or whatever martingale in size, all right? So let's say you set it to 9, which means that it could bounce through that zone 9 times and take 9 different martingale positions. But you can also set it here, continue opening new orders using last lot size when max is hit. I think it's just, yeah. So what that means is if you have this set to 9, or let's just use a different number. Let's say you have it set to 5. So you're letting it take martingale positions on up to 5 trades. All right. If it wants to take a 6th trade, it'll still take a 6th trade, which is a hedging trade, but it's going to use the same lot size of the 5th trade. It's not going to martingale anymore. Okay. That's all you're doing. And then again, what you're going to do here is allow new trades when managing while trading is off. So again, if you have set trading to Friday as no, which means it's not going to take any new, or it's not going to open any new zones. But if there's an existing trade sequence open and it needs to add additional positions to that trade sequence, whether it be martingale positions or whatever, you're telling it, yes, I want it to be able to manage that and open new trades if need be until that trade sequence closes out. Okay, so when you have trading off or trading Friday set to no, all that's telling it is I don't want to open any new zones. I don't want any new zones being painted or any new trade sequences being started, but it will manage any existing trade sequence that you have prior to that until it closes it out. And then your information font size, this, and I'll show you here in a second. I think, I don't think I have this account validated, but let me see if it'll work. Actually, you know what? I'll show you on a different one that I know I have validated. I'm not sure if I have this this demo account that I'm showing this on. I'm not sure if I have it validated in the back office, but I'll show you what the scoreboard looks like. But that font size, all that basically says how big do you want the font to be in the scoreboard, and then where do you want that scoreboard to be posted, on the right side of your chart, on the left side of the chart, whatever, right or left, whatever. I typically have it on the right, but it's up to you what you want to do with that. Okay, and then you can also set this to notify you if you want to use the MT4 notification service. That's on a different video. We talk about that, but it'll notify you whenever trade sequences are closed out or new trades are open or what. If you want that, ding to your phone, you can do that. You can set that up if you want to. Okay, so that's all there is to that. Let me show you so you can see here. This is what the scoreboard looks like. Okay, so this is just the font size. I think on this one I have font size set to 11 maybe. Yeah, you can see your information font size. I have it set to 11. So if you have it set to 10, it'll be a little bit smaller. 12, it'll be a little bit bigger, whatever. So, but that's the scoreboard. And again, I have it set to my right side. If you put it on the left side, it'll be over here. All right. So that just kind of shows you what's going on. Again, the markets are closed, so pretty much everything's set at 0 right now. And you can see here I have my take profit amount set to $34.50, but that's also because this particular account is right now it has over $13,000 in it. Okay, and I am using, this is a demo account that I'm testing some things on, so I have this set to aggressive 0.01 per 500. So what is that next? Oh, I don't know, I can't remember off the top of my head, but anyway, I have my take profit set to $34.50. So it's going to take lot sizes, and then once those trade sequences hit $34.50 to close it out, paint a new zone, start it all over again. All right, so hopefully that helps. Hopefully I maybe cleared some things up for you, helped you understand how the zone strategy works and what the zone software does to trade that strategy. I'm telling you, this software and this strategy is absolutely killer, absolutely killer. So let me just show you one other thing here too, just to, and I know most of you have seen these, but I'm going to show it to you again, just to show you truly how good this software really is. All right. This is one of the accounts. This is an account we've had running probably the longest. We started this one with $1,000, okay? And you can see here in 170 days, so in just under 6 months, we've already done more than 120%. 120% growth, and look at this, 100% of the trades have been taken off the Euro USD. 100% of the trades have been on the Euro USD. And in 170 days, we did 120%. This is another account we started a little bit more recently because we have a lot of people in the group that want to start with large accounts. So we started one with $100,000 in it. We started this one 59 days ago, so almost 2 months ago, pretty much right at 2 months. and this thing has already done 61% in 2 months. And look, again, 100% of the trades have come off of the Euro USD. All right. So the software that I just showed you how to set up and how to run is exceptional, absolutely exceptional. It works like a charm. You're going to love it. Use proper settings, run it on the Euro USD. As your account gets larger and larger, like 2,500 or more, if you want to start to experiment with multiple pairs, but with lower lot sizes, more, more conservative settings per pair, you can do that. And then we also talk about, if you're going to do that, then you want to use correlating pairs if you're going to do that down the road. All right. And just to kind of give you a quick example of what I mean by that is, hold on a second. Let me go here. If you have the tracker, you're going to want to use the tracker for this. So the best way to do that is to go to your Euro USD correlating chart, right? Pull up the Euro USD and see what pairs correlate or negatively correlate with the Euro USD. Right this second, at the time of this recording, you can see here, and I'm actually going to change this down to the hourly. So you can see here that it actually shows a negative 0.94%, negative 0.96%, and negative 0.95% on all three of those time frames on the USD CHF. So those are negatively correlating with each other. They're opposite correlations, all right? So when one's moving down, the other one's moving up, or vice versa. So they work really well and correlate with each other really well. So if you get to a point where your account's large enough and you want to start experimenting with one or two pairs on there, adding a couple of pairs to it, what you want to do is you want to see what pairs are correlating or have a negative correlation during the current week. Right this second, at the time of this recording, it's USD CHF. So as you can see here also, I'll show you too. Look at this on my demo account. I have, well, this one's not actually running, so I can close that out. But right now, I'm actually running the Euro USD and the USD CHF on this particular demo account. So you can see I actually have this running on both of these accounts. And you can see here again, this is a perfect example of what I was talking about. So this particular trade sequence here, this just closed out this past Friday, but this one bounced around in the zone a little bit. So this one had 1, 2, 3, 4. This one had 4, 5, 6. This one bounced around a little bit. It had 6 positions. So you can see this red line, that's 1, blue line 2, blue line 3, red line 4, blue line 5, and then there's another red line right here, 6. So it's 6 positions right there. But you know what? It broke down, and then when it hit the take profit, when it hit my 30, well, actually now it's up to 37.50, but it was 34 or $35, whatever it was. It closed that out, and it closed all of those trades out. It's a trade sequence, so it closed all of those out at the same time. Okay? When it hit my take profit, taking into consideration all of those positions, all 6 of those positions, the total profit was hit. The martingales offset the losses, and so on and so forth. And next thing you know, it closes it out right here and close it out in profit. And then it closed down trading for the week. So you can see here, it didn't paint any new zones, and it didn't open any new trades because I had Friday set off. Okay, so that's a perfect example of how that works. All right, so hope that helps, and hope you have an awesome time using the Zone Trader. You're absolutely going to love it. This thing performs like a champ. Just stay consistent. Think long term. If you can do anywhere from 2.5% to 4% a week on a completely hands-free auto trader that auto compounds for you, that is absolutely phenomenal. And some weeks better, some weeks maybe a little not as great. But you know what? It's all about the long term. So don't judge your results on 1 week or 2 weeks. Look at it really in 90-day increments. All right, first 90 days, how did it perform? Next 90 days, how did it perform? All right, that's the best way to look at your overall performance and growth, because this thing does work, and it will work for you, just like it's working for everybody else. You just need to let it go to work for you. Okay? Thank you so much. Enjoy, have fun, and we will talk to you very, very soon. Bye-bye for now.